Welcome to the Deep Dive. Today, we're really digging into something significant. It's the new 2025 tariff system initiated by former President Trump.
Yeah, it's definitely making waves globally.
Absolutely. We've got a pretty detailed analysis here, and the idea is to, cut through the noise, give you a clear picture of what this system is, why it's happening, and, well, what it might mean.
Right. Think of it as a shortcut to understanding this big economic shift.
Exactly. And when you first look at this analysis, what really jumps out is just how broad this new tariff regime is.
Oh, definitely. It's ambitious. It's not just tweaking things. It's a multifaceted system trying to tackle a lot of different issues all at once.
Multifaceted is a good word for it. So let's try and unpack that structure. What are the core pieces we need to understand first?
Okay, so fundamentally, the system targets countries the U.S. sees as, let's say, unfair traders, and also countries perceived as contributing to domestic problems here in the U.S. So you see this play out in a few key areas. China, for example.
Right.
The tariffs there started at 10%, but now they've been bumped up to 20%. And they're really zeroing in on specific things: high-tech goods, rare earth elements, which are crucial, semiconductors, pharmaceuticals, basically the really strategic parts of the economy.
So very targeted towards China's tech sector, it seems.
Yeah.
What about closer to home, North America? The approach there seems, well, different.
It really is. For Canada, it's a pretty broad 25% tariff on most goods.
Wow. Okay.
Though energy is treated a bit differently, that's at 10%, then Mexico also gets hit with a 25% tariff. But, and this is interesting, it's explicitly tied to things like illegal immigration and drug trafficking.
So linking trade penalties directly to those other issues, that's a significant step.
It is. It really shows how these economic tools are being woven together with, wider political goals.
Are we seeing any older measures coming back too? I think I saw something about steel.
Yes, absolutely. The steel and aluminum tariffs, they're back. Expanded, actually, to that 25% level. And the analysis we have suggests they might even extend that further, maybe to copper, other metals important for defense or infrastructure.
Right. Yeah.
Beyond that, there are these things called reciprocal tariffs, basically targeting countries that already have higher tariffs on U.S. goods. Sort of a you hit us, we hit you back kind of thing.
Tit for tat, essentially.
Pretty much. And one more piece, special levies on foreign companies, particularly those making things like cars or electronics overseas, but selling a lot here in the U.S.
It really does sound like a comprehensive strategy, not just tinkering around the edges.
Not at all. And the analysis really emphasizes this dual purpose. Yes, they're economic tools meant to change trade flows, but they're also, political signaling, a way to push for renegotiating deals and project American strength, economically speaking.
That makes sense. So with a move this big, there must be some core arguments driving it. What's the strategic rationale laid out in the analysis?
Well, the administration's case, as presented here, really rests on a few main pillars. The big one is protecting American jobs.
Okay, the jobs argument.
Right. The idea is to push companies to bring manufacturing back to the U.S., shield domestic industries, think steel, auto, textiles, from what they frame as cheap foreign competition.
A clear focus on those traditional industries.
Yeah.
What else is part of the justification?
National security comes up a lot. The analysis mentions concerns about relying too much on other countries, especially China, for critical resources. So tariffs are seen as a way to reduce that dependency.
I see.
Then there's a whole trade imbalance issue. The argument that these big, persistent deficits aren't sustainable. Tariffs are meant to push for, quote, fairer practices. And like we touched on with Mexico, using these tariffs as leverage on other issues, immigration, drug trafficking, it's all part of the mix.
Okay, so we have a better handle on the why. But when a major economy like the U.S. makes such big moves, what are the knock-on effects globally? What does the analysis show?
The ripples are pretty immediate and quite significant. No surprise, really. We saw retaliation fast.
From who, mainly?
China, for one. They slapped tariffs up to 15% on U.S. stuff like agricultural goods, high-tech exports, and they restricted their own exports of things like rare earths.
Right, hitting back where it hurts. And it wasn't just China responding, was it? What about allies?
That's a key point. Canada put counter tariffs on, I think the figure's around $20.6 billion of U.S. goods.
Wow.
And there's talk they might expand that to cars, food products. Mexico also responded, targeting U.S. grains, machinery, dairy.
So a definite chain reaction unfolding. Beyond the tariffs themselves, what's this doing to, say, diplomatic ties?
Things are getting strained, no doubt. Allies especially seem to view these tariffs as, well, unfair, damaging to cooperative agreements like the USMCA. There's a growing unease about predictability, you know?
Yeah, I can imagine. And for businesses actually trying to operate in this environment, what are the practical headaches?
Big ones. Global supply chains, especially for tech and automotive, are facing major disruption.
How so?
Increased costs, delays. Companies using that just-in-time model are really feeling it. We're seeing firms react in a couple of ways. Some are looking at reshoring, bringing production back home.
Okay.
Others are trying to diversify, moving operations to places not hit by the tariffs. India, Vietnam, Indonesia come up in the analysis.
Really highlights how tangled everything is.
Yeah.
Okay, let's bring it back home. What about the economic impact here in the U.S.? What are we seeing?
Domestically, one immediate thing is a bit of an uptick in inflation, short-term at least.
So higher prices.
Yeah, consumers might start seeing it on imported goods, electronics, groceries, that kind of thing.
Yeah.
The cost of the tariff gets passed on.
Right.
The job market looks a bit shaky too, maybe some gains in steel, perhaps agriculture, but industries that export a lot or rely on those global supply chains, they could see job losses. And overall, this kind of uncertainty, it makes businesses hesitant, less likely to make big investments when trade policy feels unpredictable.
And the bigger picture, the global economy overall.
Well, the major international bodies, the IMF, the World Bank, they're warning about a potential global slowdown.
Really? A slowdown?
Yeah, even recession risks if this tariff escalation continues. Emerging markets that depend heavily on U.S. exports or global supply chains, they're feeling the pressure. Currency issues, capital flight, it's destabilizing for them.
Okay, this analysis we're working from, it tries to be comprehensive. Does it point to any potential upsides or advantages of this system? According to its proponents, anyway.
It does lay out the arguments for it. One potential positive mentioned is revitalizing domestic manufacturing, making U.S. production more competitive on price.
Okay.
Another is bargaining leverage. The idea is these tariffs give the U.S. stronger tools to negotiate better bilateral trade deals.
A tougher negotiating stand.
Exactly. There's also a geopolitical angle showing a firm stance on trade. And the analysis notes, domestically, particularly in economically distressed areas, these kinds of America First policies can find significant public support.
Right. But every big policy has downsides. What are the major criticisms or potential drawbacks highlighted in the analysis?
They're pretty significant. Higher consumer prices is a big one. Tariffs are basically import taxes, right?
Yeah.
And usually consumers end up paying those. Then there's the risk of a full-blown global trade war. The cycle of retaliation just keeps going, hurting everyone.
A downward spiral.
Potentially. The uncertainty factor we mentioned, that hits investors, increases market volatility, makes planning really hard. Farmers are highlighted as being particularly vulnerable. Retaliatory tariffs often target agriculture, which is huge for the U.S. economy.
A major impact there.
Definitely. And finally, there are legal challenges. Countries taking the U.S. to the World Trade Organization, questioning the legality of these tariffs, that carries reputational risk too.
Let's talk about the immediate market reaction. The analysis goes into how financial markets responded right after these tariffs were implemented. What did that look like?
Sharp and mostly negative. Here in the U.S., the S&P 500 took a significant hit. The analysis mentions nearly $2 trillion wiped off market cap at one point.
$2 trillion.
Yeah, driven by fears of an economic downturn. Tech stocks got hammered particularly hard. Many rely on Chinese components or sell a lot overseas.
And this wasn't just a U.S. phenomenon, right? It spread.
Oh, absolutely. Global reaction. Asian markets, the Nikkei in Japan, ASX in Australia, big drops. Chinese indexes fell sharply too. Europe wasn't immune either. Germany's DAX, London's FTSE, they saw turbulence because their companies are so plugged into global supply chains.
Right.
We also saw currency markets react. The U.S. dollar actually strengthened against the yuan, the Canadian dollar, the Mexican peso, which ironically can make the trade imbalance worse.
Interesting effect.
Yeah.
And investors, how did they behave amidst all this volatility?
Well, the analysis suggests a shift. Some major funds started trimming their exposure to U.S. stocks and bonds.
Moving money out.
Yeah, looking for safer havens. Gold, some cryptocurrencies saw inflows. Also, some investment shifted towards emerging markets seen as maybe less exposed to these specific U.S. tariffs.
Okay, so looking forward,
Mm-hmm.
it all feels very uncertain. What kind of future scenarios does the analysis suggest might play out? What are the possibilities?
Highly uncertain is the key phrase. It really depends. One major risk is this retaliatory dynamic just keeps going, escalating further, causing more economic damage and political friction.
Or tit for tat?
Right. Another possibility is that this pushes countries towards restructuring trade agreements more broadly, maybe leading to a more fragmented, protectionist world order.
A fundamental shift.
Could be. Domestic politics here in the U.S. are obviously crucial, too. Elections could mean policy continuity or a complete reversal. That's a huge unknown. And one other thing mentioned is the potential acceleration of technological decoupling. Basically, the U.S. and China moving towards separate tech ecosystems. That would have massive long-term consequences for innovation.
That's a lot to consider.
Mm-hmm.
This has been a really useful deep dive, breaking down a very complex situation. If we were to boil it down, what are the absolute key takeaways here?
I'd say the main point is that this 2025 tariff system is a really major and, yes, controversial change in U.S. trade policy. The stated aims are about protecting U.S. interests, boosting domestic industry. But the analysis makes clear it comes with substantial risks, potential for a global trade war, strained international relations, and definite financial market instability.
So as you, our listener, think about all this, it really prompts some big questions, doesn't it?
Yeah.
What does this shift towards, well, economic nationalism mean long term? How could it reshape the global economy for the next generation?
Yeah, thinking about those unintended consequences, the whole ongoing tug of war between globalization and protectionism,
Yeah.
it's really brought into sharp focus by these developments.
Definitely something to keep thinking about. Thanks for joining us for this deep dive.